FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's July 9th, 2020. Well, we've had quite some move in the metals markets, stock market recouping the majority of its losses from March, and a lot of other markets. Interesting times for sure. Where do you think it's all heading? We'd love to know from you. Love to hear your viewpoint. Email us, kl@kerrylutz.com. Well, our good friend Eric Hadik is with us now. You find him at Inside Track. That's INSIIDE track.com. And Eric, it's great to have you back on. We haven't talked to you in a while.
Yeah, it's been a little while. Thanks for having me back, Kerry.
Of course. So interesting things have taken place. The market had that major sell-off starting in February and going through to March. And now it's in the process of recouping most of its losses. The Nasdaq is trading at all-time highs. What's going on here?
Well, one of the things that I think you and I talked about early in the year was, and have really talked about over the last year or two, is kind of the unique parallel that this time period, and when I say this time period, I kind of first broaden that out to 2018 through 2022, how that compares to 40 years ago, 1978 to 1982, and particularly on a technical and market cycle basis, but also similarities within the geopolitical arena. I think we talked last year, and I was talking about just the similarities between some of the conflict and antagonism between America and Iran in late 2019 versus late 1979. And there were a lot of other similarities I've pointed out since 2018, how the swings in the stock market have been remarkably similar to what took place 40 years earlier. And they've continued to vacillate on that similar intervals and parallels to 40 years ago. And so coming into early 2020, I was explaining and did several reports and then issued a couple of special alerts in early February, but explaining how you had these yearly and multi-decade and also monthly and weekly cycles all coming into play in January and February, calling for a multi-month peak. And if you looked at what happened exactly 40 years ago in January, February 1980, through March 1980, you would see that the market peaked on February 12th, 13th, the Dow did, and then had a sharp sell-off into March 23rd to the 27th, that particular week. So that was one of the things. And again, I don't rely on just one broad cycle like that. That would just be kind of ludicrous. But it's been intriguing to me to see how strong of a parallel there has been. So I was alerting my readers to that in February. But also there's been an uncanny 2-year cycle in the markets. And I've talked about this even in some of our conversations dating back as far back as mid-2018. I was talking about it and how October of 2018 was shaping up to be similar to 2 years earlier and 2 years before that and 2 years before that you saw these similar sell-offs. And that's exactly what happened in 2018. But my point in that is that if you look at what the market had done in early 2018, between February and March of 2018, it had done almost the exact same thing that the 40-year cycle. So when you're sitting in January, February 2020 and looking back at this 2-year cycle from 2 years ago and also looking at the 40-year cycle from 40 years prior, the market had done almost the identical thing, peaking in mid-February of 2018 and then seeing a sharp sell-off into March 23rd, which was when the Dow set its low close for for the first 6-8 months of 2018. So you had these two multi-year cycles coming into play. And then a lot of there's an uncanny 16-month and 8-month cycle in some of the Dow indices that was also looking for the same thing. So it was more the synergy than anything. And then technical signals corroborated that. I put out two special articles in mid-February. One was called Perfect Storm of Sell Signals. And the other had to do with this a foreboding sell signal. And my analysis then was that we should see a sharp sell-off into March 23rd to the 27th. But that was where we could set a 3 to 6 month and potentially much larger than that bottom. And sure enough, the market did just what it did 40 years earlier, just what it did 2 years earlier, just what it did in sync with this 16-month and 18-month cycle. And so my contention has been, based on a lot of corroborating indicators, that March 23rd timeframe would signal a very significant bottom, and that the parallels to 40 years ago would continue to unfold for a myriad of reasons. And that we would see the markets head back up to new highs just as they did in 1980. And actually, the markets waited until, I believe it was May of 1981, before setting, April or May of 1981, before setting a more significant top and then seeing the sharpest sell-off of that 4 to 5 year time period that I'm monitoring between second quarter of 1981 and the third quarter of 1982. And a lot of my indicators are already telling me to look for something similar, that the market could see a bigger selling period between second quarter of 2021 and third quarter of 2022. So you're in this broad cycle that the market has really been adhering to what occurred 40 years ago, and it just reinforces the 40-year cycle that I have talked about for a couple decades now. And so we're in that period, bringing it down to a more precise, weekly and daily basis. I think the market is on track for an intermediate high here between July 8th and 15th, and we should see some selling after that. But then there's one particular indicator that I rely on for more accelerated moves that is setting up for late July, early August. It just needs to trigger a couple more things to corroborate that outlook, where we could see another rally in the market.
Interesting. Well, the ferocity of that decline was kind of breathtaking, wasn't it?
Yes, no doubt about that. And it was a perfect storm of everything from these multi-decade right down to daily and weekly cycles and indicators. I use the cycles as a backdrop, but then I have very specific technical indicators that give me my trigger signals and also give me risk parameters, money management parameters. So it's not just kind of swinging in the dark. But all of that was coming into play in mid-February. And like you said, it was just almost unprecedented, the intensity and the acceleration of that decline.
Interesting. And then when we look at precious metals, we've seen quite a rally in gold and silver, huh?
Yeah, and what's interesting to me is that whole time period from February through the present, when you look at each of the metals individually and then as a group, really silver set its lowest low in mid-March in over 10 years. And that just kind of reinforces that silver often adheres more to kind of the economic, its industrial applications, more than it does to a safe haven gold-like status. And so you had silver going to multi-year lows, even as gold was just seeing a sharp pullback to some critical support. But I've contended throughout this year that I thought once we got into the second quarter and beyond, that silver would begin to wrestle the lead away from gold, and that ratio and the moves in silver would start to be proportionately greater than what we see in gold. And I'm looking at that scenario unfolding from the second quarter of this year through the second quarter of next year. So I think that you're going to see silver have a little bit more of its day in this time frame.
Yeah, interesting, because it broke the other day on Wednesday. It broke $18 again, and heading up higher. It looks like to 19 or so.
FSN Radio. It's all about what's next.
Arcana Corporation is on the verge of bringing the world's highest grade silver mine into production. The Revenue Virginius mine in Colorado has proven improbable silver reserves grading nearly 37 ounces per ton silver, with an all-in sustaining production cost of only US $8 per ounce of silver. The mine is fully permitted with infrastructure already in place, and the company has announced they plan to commence production in 2020. Achieving successful production usually results in a significant upward share price re-rating on the Lassonde curve. Arcana trades under the ticker AUN in Toronto and AUNFF in New York. To learn more, go to arcana.com. That's AURCANA.com.
The Financial Survival Network. It's all about what's next.
Yeah, and actually the level just above 19, around 1905, 1910, in the September futures contract, which is what I'm kind of focused on right now, what my analysis is based on, that's kind of a critical level to me on a weekly basis. So a kind of a key filter for me is whether, particularly this week, so the July 10th close in that market, whether it is above or below. Actually, 1914 is the level. That was the high that we saw in late February, but that September silver also had set a previous high to begin the year, just around 19. And then in early June, when it spiked to new 2 to 3 month highs, it was just above 19. So that's kind of a pivotal level for me. I think I'm expecting that silver will eventually break out above that. The thing I'm watching is whether this week we see just a brief spike above it and then pull back, do a little more consolidation, or whether we break through it and really start to accelerate to the upside. But that's kind of a key and pivotal level for me.
Yeah. And of course, $20 is really major resistance, because it hasn't gotten there in quite a while. I remember 2016, the last time it broke $20, I think, and not for very long. So,
well, the interesting thing is that the September futures contract, which doesn't necessarily reflect what the historical cash prices were, but in early September of 2019, last year, it did set an intraday peak just above $20. So even on a contract basis, that's a decisive level. And then, as you say, from a multi-year historical standpoint, it's also a critical level. So it just kind of reinforces, and it wouldn't surprise me to see it surge up to that even right here in this time frame between now and even mid-July, when some daily cycles could set a little bit of a peak.
Interesting. Well, hey, the whole global financial system looks like it's up in flux. Nobody knows exactly what is going to occur, but everyone's very concerned about it, right?
Yeah, and I think that you're going to see silver continue to swing more with the sentiment of the stock market. And the irony there, or the paradox, is that, sometimes when stock market is struggling, you'll see gold rally on a safe haven status and silver sell off with the kind of economic, industrial aspect of it. And then other times, like right now, when the market's going pretty strong, everything looks pretty good. I guess there's a bit of an inflationary aspect to that. You've got gold, silver, and the stock market all rallying at the same time. So even my analysis where stock indices are concerned, the idea that we could see a couple-week peak here by mid-July, and see the same thing in silver and a pullback. But I think the 3 to 6 month outlook, particularly in gold and silver, remains very positive.
Yeah. So it would appear. And, well, let's look at some other commodities. So we saw, I guess it was May, oil futures go into negative territory for the first time. And that was a real shocker, wasn't it?
Yeah. When you see a negative $40 print on the chart, it really kind of it messes with us technicians for quite a while, because it's such an outlier or an anomaly that you really have to kind of discount it from your analysis. But then the challenge is, what do you kind of substitute in there as an accurate assessment of what the true value was? And so that's something that, when you're looking at continuous charts for a long time, is going to mess with technicians. But I just rely on either some current contracts and some other things to give you a little more reality of the levels of that low. But I don't think we're going to see anything like that for a long time.
All right. Well, that's interesting. Yeah, that was definitely an anomalous situation. I wonder if the airlines have been buying. What's going to happen with the economy at large, the GDP? We're in this kind of hibernation mode right now. It's almost comatose in a lot of places. We're going back and forth with shutdowns and openings, reopenings. What are the cycles telling you here, Eric?
Well, I think that kind of fits perfectly with this analogy to 40 years ago, and not that the same thing was happening there economically. But if you look at things like the stock market, and you look at the swings from 1978 to 1982, it was kind of this, it would rally up to new highs, but only stay in that new high ground for a brief period of time, then see a reasonable sell-off. And then when it started to look kind of bearish, it would bottom out and start to head back up. But there wasn't, compared to other 4 and 5 year periods of time, there was not a clear uptrend or downtrend. And that is what I have been expecting since the middle of 2018, that you would see these sharp sell-offs, then you would see strong rallies back to new highs, but then the market really wouldn't. The market as a whole, you've got obviously your tech stocks and some others that are so far and above or far ahead of the majority of stocks that they're doing one thing. But if you look at the general market, and even look at something like the New York Stock Exchange Index with 2,000 stocks, looking at that over the last couple of years gives you a significantly different perception than looking at, say, the Nasdaq 100. But getting back to your question, that I think that what we're seeing in the economy now is just going to reinforce and even exacerbate that whole pattern, where you just get these wild swings. All of a sudden you get a few back-to-back numbers that look just so bullish, relatively speaking. And so the market gets frothy on that. And then all of a sudden, as we've seen now, you start to get the COVID cases really surging and spiking in a lot of areas. And, at first it's kind of played down. Well, it's just because of more testing. But then the people saying that are completely ignoring the hospitalizations, the percent of positivity, and all these other factors that are telling you, no, it's more of a concern than just more testing. But those type of things take time to factor into the markets. It's once you start to get a few more negative things, then all of a sudden you're going to see the market say, okay, we're getting ahead of ourselves here. And you'll see those swings continue. And I think on a broader perspective, you're going to see that in monthly and quarterly economic numbers and expectations. So that pattern that we saw 40 years ago is probably going to continue. As I said, it would probably lead to ultimately higher highs in first half of 2021, but then could certainly continue that pattern and see a more significant sell-off in the mid-2021 to mid-2022 period.
So just so fascinating to see everything that's happened here and kind of thrown the world into flux as far as the market goes and sell-offs. We're seeing at the same time the Dow and the S&P not making new highs. The Nasdaq is making new highs. I mean, it's kind of a crazy split up market. Schizophrenic market, if you will. Yeah,
and the thing that I've often watched as a bit of a canary in a coal mine, and this was, before we had any idea that you'd get what we got in February and March, and you'd see the airline stocks and related stocks just plunge. But the Dow transportation average has often led the turning points, particularly the tops in the other indices, dating back to the late 90s. And so I always keep one eye on that index just to see if it's giving more of a confirmed signal. It'll often have its brief sell-offs that may not materialize in the other indexes, but it's when there's more of a technical breakdown. And that was when I was referring to the 8-month and 16-month cycle, the transportation average was the one really adhered to that the closest. And that was the index that was looking for a mid-January peak. And when it rebounded in February, the Dow was setting new highs, the S&P and Nasdaq were setting new highs, transportation index rallied to a lower high and was giving some additional sell signals in the second half of February. That was one of those factors that really turned me bearish at the time. And it's one that's causing a little concern on a 2 to 4 week basis right now between mid-June and mid to late July. It has, after it had a sell-off into mid-June, it bounced for a day and peaked at about 9,500. And then just more recently, when it rallied into the first day of July, it ran into resistance at that same level, right around 9,500. And that was far enough below the early June lows. So it has now set a series of lower or equal highs, even as you point out, the Nasdaq 100 just continues to set higher highs. That type of divergence is the type of thing you look for. And it's usually the final stage when something like the transportation average gives a more confirmed sell signal, that's when all of a sudden the other indexes, for whatever reason, it's not just the fact that the transports are doing it. They just seem to be reflecting a developing reality that the other markets haven't quite adjusted to. That's when you kind of see those quick sell-offs, and that's an index that I'm watching closely here over the next week or so because of some of the things developing in it.
All right, so we talked about oil, and what about the dollar that's been heading lower recently, but it's still relatively strong?
Yes. The one thing that I don't even know if I want to say concerns. It all depends on whether you're a higher dollar or lower dollar advocate. But the one thing that I think is noteworthy is that the dollar for 20 plus years has adhered pretty closely to what is approximately a 3.25 year cycle. I break it down to months, and 38 to 41 months is the average duration of that cycle. And it often hits right around the 38, 39 month point in time. And so the previous peak, and that has times both low to low cycles, high to high cycles, and even some of the major moves in there from low to high or high to low. It's just been a very consistent interval for moves in the dollar. And so coming into this year, my focus was on that time period around March of 2020. And because that was 38 months from the peak that we saw in January of 2017. And sure enough, that's when the dollar spiked up to its highest point in a couple of years, but remained just below that early 2017 peak. And so I'm under the kind of impression and perception that was a 3 to 6 month and potentially a 6 to 12 month peak in the dollar, and that the dollar will probably work progressively lower on balance into the early part of next year. And that kind of fits with some of the things I've discussed, like the metals markets that, although they don't move in lockstep inversely with the dollar, there's even times when the two move together up or down, dollar and gold. But a general dollar decline could help support gold and silver. And you're seeing a lot of, from all of the stimulus and everything else, seeing these types of things that economically and financially over a little bit broader period of time could have a weakening effect on the dollar. And I wouldn't be surprised to see the dollar index get back down to the lows it saw in early 2018, which was around 88 on the index. But right now it really has its strongest support right around 95 to 95.50. So I need to see it break below that to really trigger the next phase of that sell-off. But I am expecting to see that later in the year.
So lower dollar, which will be a different, totally a different trend than what we've had for the past, 3-4 years.
Yeah, the interesting thing, too, to me is as we were coming into 2016 and 2017, I had done a couple of articles just showing the consistent correlation between Democratic administrations and a rising dollar, and Republican administrations and a falling dollar. And at the time, even before the Republicans had their candidate nailed down, I was saying that my work showed we should have a Republican in office because I thought that the dollar was due for a critical peak at the end of 2016, early 2017, and a decent sell-off from there. And I should say often that correlation has to do with an underlying philosophy too, that you will hear Republicans more favor a weakening dollar in order to increase export demand. And so you've seen, and that dates back to even the 80s when you had just a series of kind of bash the dollar type of constant communication from the Reagan administration starting in 85 and going forward from there. But you've seen that philosophy again influence Republican administrations. And so the interesting thing is really we set our highest monthly close on the dollar index in December of 2016, our highest intraday peak in January of 2017, and have never reattained those levels. So we're certainly not seeing any additional appreciation of the dollar, but its sell-off, it went through a one-year sell-off where it went from 104 down to about 88, so about a 15% decline during the first year of the Trump administration. But then as the trade war kind of kicked up, and I think China also saw that a lower yuan was one of their battling points. Up until that, there had been an initial appreciation of the yuan during the first year of Trump's administration, and that had some influence on the overall dollar situation. But it wouldn't surprise me to even see the dollar come back into that whole trade debate over the next 6 months, and whether that's something where you've got a resolution of some of the trade, and so China lets the yuan appreciate, and you see the dollar start to sell off, or whether it's a tool used in that trade battle. I don't know how the exact fundamental will unfold, but the technicals and cycles are telling me that the dollar should see a decent sell-off, and doesn't matter to me in the end what the fundamental is if the market still does what I perceive the technicals is showing.
I see. Well, that all kind of makes sense. And, well, I guess we got some interesting times ahead. Any indication of weather patterns, weather cycles, or, geopolitical natural disasters? Is that a cycle, too, that we can measure?
FSN Radio. It's all about what's next.
Trilogy Metals is a world-class developer in Alaska's Ambler mining district. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
The Financial Survival Network. It's all about what's next.
I certainly follow broader cycles on all of those types of events and phenomena, but it's not something that you can really bring down to a couple months or anything like that. I suppose the one thing that I've been watching, and again, it comes down to this idea that the exact fundamental isn't always known, but it could be something with weather. I thought we would see a decent surge in the grain markets in the third quarter of this year. That I was looking for an initial surge into July, and then another one into September. But as we've seen, the initial surge was primarily, there was a little bit of acreage news there that impacted it, but it was really Chinese buying that they finally started to fulfill some of the commitments they had made in the Phase 1 trade deal early this year. And that could be what even drives the second wave of buying in those grain markets that I think we could see in August, September, or it could be some weather-related issues too as the crop progresses. So that's one of those things where it's too vague or ambiguous for me to really get strong conviction on what fundamental it is and whether things like weather cycles would play a key role.
Understood. So, yeah, we're just looking at really unprecedented times. I mean, they've literally almost having a 1,000-year flood in southern China now by the dam, and I'm just wondering if any cycles for global cataclysms or natural disasters look like they might come into play.
The only thing that I've been looking at is, and this I really view from a broader, like a multi-year basis, but is volcano cycles in this multi-year time frame, really starting a year or two ago and stretching into 2023, 2024. And I don't even want to go to the cataclysm type of category, but it's just cycles that time a greater spike in activity, a little more convergence of events, and what the extent of that impact is remains to be seen. But that is one thing that I'm watching over the next couple years.
Yeah. Well, we're definitely in for interesting times. Always appreciate you coming on, Eric, and sharing your insights with us into the cycles, because everything goes by cycles, as we know. And just tell us the best place to find you on the web these days.
Best place is our primary website at InsideTrackTrading.com, spelled with the extra I in the middle, INSIIDE, TrackTrading.com. And then also that we still continue to post a lot of archived articles and analysis at 40-year cycle, the number 40yearcycle.com, things that pertain to that 40-year cycle. And so you can get hold of us through either site and requesting samples of some of the stuff I've discussed here or a free trial, and could do that through either website.
All right. Excellent. And there's a link, as always, in the show notes to this interview on Financial Survival Network. Make sure you send us emails, kl@kerrylutz.com, with your impressions of what we just discussed, where the markets are heading, disasters, all these things, and kl@kerrylutz.com. Main website, financialsurvivalnetwork.com. Eric, thanks so much. Always a pleasure.
Thank you, Kerry. Have a great day.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.